Hey guys, how's your Thursday?
Hey Scott, great, thank you. Hi Jamie, how are you?
Andy, I'm fine and dandy. What's going on there, Scott?
Oh, yeah, not well, I'm going to answer for Scott, not a lot. uh, Thanks everybody. Is there audio at this time? Yes, Julie, you should be hearing us. Hopefully, can you guys hear me okay out there? Okay, thank you guys. Yeah, Jamie will probably type to Julie maybe to have her re-log in. All right, guys, thank you so much for taking time out of your day. This is the Trading Studio. My name is Andy. I'm joined here with my good pal, Jamie. And let's get started. And before we do, let's go over the legal issues here. A publisher, we are a content provider. We are doing this webinar today for educational purposes only, okay? Nothing that you see or hear should be construed as investment advice. If that's what you're looking for, seek out a registered advisor, a stockbroker, or somebody who hangs a license and can advise you in that capacity. So, all right, let's dive in to the support, training, and education we have here. Our product, and we're also very proud of our education and our training to get the tools you need, or I should say the education you need to work these powerful tools. Okay, the first place I would take a look is the Trader's Room. Okay, that's free for everybody. You do not have to be a subscriber to Trade Ideas. It's hosted, moderated by Barry. He's very good trader and also knows the software very well. And after the first maybe couple hours of trading, he's really good answering any questions that you might have. And then we have these webinars every day in this time slot, 5 Eastern time, where you can come in and learn more. We'll talk about building. We're going to build an alert today and take a look at it and like to show off our tools. And so we do that throughout the week. Most of the time it's myself, Jamie, and Steve running those webinars, but on Wednesday we do give you our CEO, Dan Merkin, and our CTO, Brad Williams, for a cool little demo and a Q&A session. And they'll go over things that are coming down the pike, if you will. And then we have on Friday, every Friday at 11 Eastern time, we have the Friday support session. This is a scheduled 3-hour event. I'll be honest with you, it's mostly been lasting about 2 hours. People run out of questions, but that's okay. We get tons of questions answered. You're going to learn something. If you are available during that time, please get to that Friday support session. You'll learn a lot about our software. And then let's not forget the training and education resources of TI University. Okay, this is a 4-part class. It starts every Monday at 12 Eastern, and it runs Monday, Tuesday, Wednesday, Thursday, and you can see there it's kind of a graduating class up to advanced, done on Thursdays at 4:01. These are available on our YouTube page if you cannot make that class at that time. So you can go to YouTube, put in Trade Ideas, and go to the playlist, and you will find TI University, and they'll have all 4 of the classes in there. All right. Paper Trader is here. I forgot the changes coming soon to now here, but anyway, guys, we are going to be pushing this hard because it is here, it is working, and you guys are going to get a lot of benefits from it. It's a good way for you to practice trading without having to go with a broker and fund an account and all that. You can just come on to Trade Ideas and not only get a great alerting, real-time scanning software, you can now paper trade on it for free. So, well, I shouldn't say for free, with your subscription. All right. The agenda for today, we're going to talk about the market recap, as we always do. And boy, Holly recap, we're going to have a lot to say. Holly has been, like I said, doing better, much better. Not that she was doing bad, but boy, lately, it's been quite impressive. Jamie will take it over and go over some really good trades today from Holly. New alert here, random acts of violence. anyway, I'll just save that for when it's when it's come on. It's nothing earth-shattering, but it's a way for you to start thinking differently. This is a market that's really hasn't gone anywhere over the last year or so. So it just kind of gets you thinking contrarian. I've done some stuff like this in the past, but here's a new one we'll talk about today. And then I'm going to talk about I'd like to talk more about trading. We love talking about the software, but like to give little snippets of trading, and I'm going to talk about why I added to my total position today, and we'll save that for the end there, but it'll be good stuff. I think you guys will definitely enjoy that and learn something. So let me back out and get a drink of water and start the market recap. Amazon taking a little beating in the after hours there. All right, so let's zoom in, and boy, just kind of just ever so slowly back and forth, but it is creeping higher. You got your upward sloping 10-period moving average. Just once again, seems like every time we get up to this level, we just seems like we run out of steam. And what can be more frustrating is when we do finally break these highs, it just dies. And earnings season, that's the only thing I think it can power through, in my opinion, since we just seem so tired up at these levels. But nonetheless, there's not a real bear case to be made. We're still in, I labeled them the other day, funk number 1 and funk number 2, and at least we're out of funk. If you're bullish, it's good to be out of funk number 1, which is this level down here, but we still kind of stuck in this level, and I really got to take that higher since we have another few wicks up there. So here we are. Boy, the way that the market opened today with a big gap up and just plowed down for the first couple of hours, you thought, oh boy, here we go again. But toward the end, we put in that tail and bounced higher. We'll see how Amazon is going to affect Amazon earnings, and of course there'll be other earnings coming out, but we'll see what happens there. But I think we have the nice upward sloping 10-period moving average. And to see what a mess this market is, all you got to do is look at these 10-period moving average just snaking through the marketplace over the last several months there. So it makes it for tough trading, but nonetheless, it's our market. Okay, it's easy to gripe about it. That's the easy way out. The best thing to do is find ways to profit from it. Okay, so, and I think later on I'll give you an idea of style that can kind of help you maybe take advantage of this kind of price action. All right, so I think, boy, it's a broken record. I'm not going to sit here and spin it and just keep spinning it either, because once again, I think we can, draw the moving averages, horizontal lines, and we want to, but I think what it is, you got this level up here that we really, need to get above and stay above, not just one wick and come right back down. That's the area, and then of course you have this funk level number 2 down here, and obviously if it gets coming back in there, then I don't know what to tell you. You just got to be a swing trader or a day trader, because as far as a longer term picture here, that doesn't mean you can't find stocks that look totally different. Well, for Lersics, for example, these are the kind of stocks I think that are holding up the market and keep pushing it higher. There's many of them that are going in the opposite direction, but as long as you have big semis coming out with earning reports like this, and I can go on. There's several companies. This is what keeps the market afloat. So take a look real quick at the Qs, and helped of course by the semiconductor today. Looks pretty good. You can see it's trading down in after hours, since Amazon does have a big weighting in the Qs. Let's take a look at the Dow real quick, the diamonds, and now nothing really impressive there, but once again, archaic. outdated. IWM, I don't look at it a lot during the day, but let's see what we did today. And yeah, and I can see why I don't look at it too much. It's just really going nowhere fast. Jamie, anything you'd like to add to the overall market recap?
No, just, kind of along the same lines of what you were going over. I mean, we're in funk level 2 now, or funk area 2. So, we got earnings next week, should be pretty interesting. I mean, actually tomorrow should be pretty interesting. With Amazon missing and everything.
It's true.
Pull that back up again, because it was trying to make up a little bit of ground. It's made up a little bit, but hey, a lot can happen between now and the next open.
Oh yeah.
And it's weird seeing the Qs do what the IWM had been doing a few weeks back. It was kind of decoupling from the other averages. And looking at that IWM again, still a long way. I mean, you could say we're still in the funk area number 2 on IWM, and until we get above that 160-ish level, will the market go without the IWM being up there? Yeah.
I know.
Your guess is as good as mine, but I would tend to say traditionally it does not, but we'll see what happens.
Yep. Mike C, a Funkadelic fan too, huh? All right. All right, but yes, all right, that's about enough of the market recap. Let's talk about Holly, and you can see the numbers over here, and Jamie will show them to you as well, and he will highlight some of the real good trades.
Yeah, give me a second here. We will do that. All right, you should have eyes on my screen now as we're taking a peek here at that IWM. That's that level right there. But on to Holly, and if we look at all the totals over here, I believe when we add all that up, we get 647.61, which is one of the higher totals that we've seen the Holly trio pull off in quite some time. And it just happens to be earnings. That could probably maybe that's the reason, maybe it's not. When we look at these stocks, a lot of them are still pretty far off from earnings. But interesting to see 1.0 and NEO finishing in risk-off mode. But the bigger winner today was definitely Holly 2.0 finishing in full risk mode, posting up slightly over 4 points on 100 share lots. Now, in my screen here, we're just assuming 1 share just so we can see the values here. How many pennies or cents or dollars you want to say all the stocks have moved. So I've got mine sorted by risk on. I tell you what, let me just stretch this out a little bit. I always like to take a peek at the full blotter here because, we did have a few stop outs, only 2 today. That's kind of about normal for Holly. If you recall back when she was struggling a little bit in some of these choppier days, we'd have an excessive amount of stop outs, maybe 4 or 5 in there, which is typically not characteristic of Holly. So this looks a lot more like her typical blotter. And, commenting on what you were talking about earlier, Andy, it's funny because earlier in the day, I messaged you and Michael, Steve, I'm like, hey, Holly looks like she's got her chops back. And that was when she was only up a couple of points. And then she added 4 more on top of that. So she's definitely got her stride going again here. So let's take a look at some of the risk on, risk off opportunity that was presented today. So I've got this sorted by risk on. And what we'll be doing is examining the difference between the risk off close profit and what these things finished at had you stayed in them. So this is a pretty glaring one. It's also the biggest one from a point perspective, not necessarily a percentage gainer, as we can see over here. Didn't really have any trades today that just blew the doors off. Just a lot of singles and doubles. A few 2%ers, 3 2%ers. It looks like 4 actually. We got 1, 2, 3, and 4. We call those doubles, and the rest are singles and little base hits, and that's what we like to see. So $1.02, even though that was on a higher priced security, but man, take a look at the chart here. Here we are looking at the 15-minute intraday. As far as giving you a little confidence, we got the run up here, so the buyers are obvious off the open. Was this an earnings stock today? Nope, they don't report earnings until December 4th after the close. Slightly over normal volume, finishing a relative volume of 1.29. But man, talk about a tame entry here. Holly generates the signal at 136.74. Next 15-minute candle, we're in the money. Not a whole lot, and you can see just kind of hovering above the entry line all day. So you really had to be patient with this one, but there really was never any reason to get out. Just kind of hugging that line all day until the last 15 minutes is when we got that pop there. So a little bit of patience was necessary, but then again, not a very stressful trade on the SNPS today. Every time I see that symbol, Andy, I think of old snaps. It used to be a
Oh
different
yeah.
symbol back in the day. I guess they've recycled it. In any case,
Are you talking about the tool company? Oh, wait, Snap.
has snaps always been?
No,
There
no.
used to be another one back in the old days. You know what I'm talking about? You used to trade
Uh,
snap. I think
yeah.
it was a
I'm trying to
different
remember
one.
the exact same symbol. I know what you're talking about, though.
Anyway, not important. Just garbage recirculating from way back in the day. PRMB. Not a bad little trade here. I like this one for a number of reasons. Once again, how was the volume in this one today? Well, we finished at a pretty high relative number, almost 2. Is it an earnings stock? Nope. This one also does not report till November 5th. Now, 13 cents versus 88, that's a pretty big spread there. Profit save was the reason she got out. So check out the entry here. As soon as Holly calls the buy 31.59, look what's looming. And I went ahead and drew the line. I mean, we're just, what, a millimeter away from also a range break. So we see Holly spitting out that buy. She's got the statistical probability. We take a look, we go, wow, this thing's kicking some decent volume. Volume level on the smaller time frames was healthy all day. So we get the signal here right before the break. Guess what it does on the next candle? Boom, we break, make that opening range break, go sideways a little bit, go down and test that 10 period, and then whoosh, catapults it back up to the highs of the day here. So a couple of ways you could have played this one. You could have just taken the initial entry with Holly, and then shortly thereafter, things are looking good, volume is high, increase leverage, increase your position, whether you doubled or added another 50% right here as the break occurred, and then pretty much off to the races. Once you see Holly getting out on that profit save, heck, even a break-even stop would have kept you in this one all day. Would have gotten a little, that was after the exit of Holly. Kind of flirty with the entry line, but nope, did not get down there. And then the 10 period just acting as the divining rod on that one. So beautiful little trade there with a lot left on the table from Holly and her profit save. Not any spread on the CRM, even though it was a decent trade, because we always like it when a profit target gets hit, and it didn't take very long, about 30 minutes. Boom, 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 over and done. This one backing off for the rest of the day. So no risk on, risk off spread there, but a good trade nonetheless. And then we take a look at Giddy here. Now this one, not so pretty. Even though it is showing a nice 40-cent spread between the 12 cents that Holly made, going into the close there being up 52 cents, but this one not acting so nice. Holly makes the entry here. We take a peck, 1, 2, think we're out of the woods. Nope, if you didn't take the money here, you weren't too happy. Comes down here, busts through these prior lows, almost acts like it's going to stop us out. So unless you were sticking to your hard stop on this one, it would have been difficult to stay in this one just because of the vacillations that it was putting on today. But nonetheless, still finished higher than what Holly made. But once we see it come down here and crack this 10 period, it'd be pretty hard to justify staying in it, even though it did work. I think you just had to flip a coin on that one. Pretty much. LNG, so 0 and 35. We did have a triple here in this net, which once again looks very similar to that snaps chart, right? Let's see, we had already broken the range here. Holly calls the buy here, and then once again, just hovering right at that entry line for most of the day. So just like the snaps trade, you really had to be patient with this one, but it didn't really give you a whole lot of reasons to exit, all right? Because, a little bit of profitability here, but most of the juice came in that last 15-minute bar there. So I do believe that is all of the risk off, risk on spread that we had today. Just stellar, solid performance from Holly. Once again, not any home runs, but a couple of doubles. Well, we could say
And
a couple of triples and
and
a double.
well, that TRLY was a good risk off play.
That
Even
is, that is, that
yeah.
is. I mean, let's not forget that one. So Holly called this one about perfectly. You know, she
Oh
gets
wait,
out. Oops, that's the wrong one.
yep,
TLRY. There we go.
that wasn't a bad one, though. Mhm.
No, no, not at all. Because look at the entry line here. Come down here
Uh,
and tap it. Never any pain in the money, and then gets up and boogies. And look at that exit. You know, not a profit target, but just a good old-fashioned timed exit.
for
The
a buck 20.
TLRY quarterback is 45-minute hold. So just pegged it perfectly.
Mm-hmm.
Now you could have made a little bit more here, but you would have had to set a little bit of a pullback. What's that? 25.39. Ooh, wait, that 25.70. So only about, tap that again here. 25.35 up to 20. So yeah, maybe an extra 30 something cents between here and there. But I mean, for a risk off exit, it's hard to get any better than that.
Mm-hmm. Nice
Yeah.
entry and nice exit, that's for sure.
And that was for a little over 1% there.
Yep.
So some good winners, some good risk off, risk on spread. I mean, hey, if Holly posted numbers like this every day, well, be a whole different ball game out there, ladies and gents. So
Yep.
it's going to be interesting though, because well, we haven't seen these types of totals in a while, and on a relatively low trade count for these types of numbers that you're seeing here.
Mm-hmm.
29 trades total. I think if you average it out, it's almost $30 per trade on average. So,
It's not bad.
bravo, Holly. Thank you very
Yep.
much. Maybe she'll give us a little bit more of that tomorrow. We will
Yep.
see.
All right.
Let me kick it back over to you, Andy.
Okay. All right. So let me see which I'm going back to my agenda in my head, and I think I was going to talk about let me dig it up here. Random acts of violence. Okay. So
sounds like a down move.
me, Jamie, Michael, small fun we play around with. We hold some positions. Obviously, this is more of a swing trading thing and a little experiment we're doing. And a lot of times in the morning, we got these positions. We come in with them, and you guys, you've heard us talk about it. The next thing you know, market's gapping up, and the market opens up. Your positions didn't gap up, and all of a sudden they start getting hit for no reason at all. So I'm thinking, and I'm seeing this a lot, good stocks, and all it is, just like you kind of saw in the market today, for whatever reason, I don't try to use the term they're doing this, they're doing that. Who knows, what's causing it, but nonetheless, you get market action like this, and you get stocks that are exaggerated. In other words, much worse, much more exaggerated than the market pulls back. So the SPYs may gap up and then maybe go down maybe 0.5% or something like this, but your stocks will go down and get killed by 3%. Well, for whatever reason, a lot of times it's just market makers trying to get you to cough up your shares. So I've created alerts in the past to try to take advantage, situations like this one. I'll take that. Thank you. Contrarian play. It's stocks that have had a good move over the last 20 days, but are pulling back to their 10-period moving average. Well, today I got to thinking, I said, well, I want to create something simple just to find stocks that has a good composite rating, okay, but they're getting hit. For whatever reason, they're getting hit pretty good. And thus the name Random Acts of Violence, okay? So how was I going to create this? All right, so let's just take a look at the configuration. And once again, I'm just kind of going through my head as I'm looking, imagining a chart in my head and what I would like to see when I see price action like this. Okay. Well, I toyed around with change from the close. First, I tried 2%, then I tried 3%, but it looked like 2.5% was the magic number. So in other words, when these things get hit, when the market's pretty much not doing a whole lot and they get hit for 2.5%, I want to take a look at them. Now, I will say this, guys, anytime you create something like this, it's hard to get it to back test, especially in this market, okay? Anytime you see action like this, guys, I can promise you right now, if you create something that back tests well, give it a couple of weeks when the market comes back down in funk number one, you know, and then it's just going to go to crap. It's not a great market for back testing because we're not going anywhere. Okay, we're in a range, and we're really, like I said, not going anywhere. So it's hard on your back testing. But what I like to do when I create this is take a look at them. And what do I want to see? I don't want to see real high relative volume, because that tells me there may be something more behind the move than just a random act of violence. Maybe it's news. I do have an earnings bracketed down here, so I do not get stocks on earnings. But it could be some other news for whatever reason. So I just want the relative volume to be below 2. Most of your big news items and your earnings are going to have higher relative volume than that. Price above $5, composite rating, a minimum of 70. Now 70 is not a bad score, but what you need to keep in mind, this stock just got hit for 2.5%. Okay, so there's a very good chance, not a very good chance, there's an absolute that it lost a lot of its, some of its composite rating during that plunge. Okay, could be anywhere from 5 to 10 points. Okay, so that's why I'm using a composite rating of 70. Okay, to me, anything above 80 is really good, unless you're breaking out to all-time highs. But when the market's kind of in a funk where it is now, if you have something above 80, that's a pretty darn good rating. So I know if it got hit by 2.5% and still has a 70 minimum, it's holding some pretty good moving averages on the daily, and position and ranges are not, you know, on the longer term are still pretty decent. Average daily volume, I'm looking for, they need to trade 500,000 shares a day on average over the last 10 days. EPS, that's just the hack to factor out any sort of ETF. I don't want to see ETFs coming through. And that's basically it. It's pretty simple. Waleed, yes, this is contrarian play. Once I show it to you here, I think you're going to get a better idea. Okay, I'm looking for stocks that are getting hit, okay, but still maintaining a pretty good composite rating. Okay, I'm not concerned about bouncing off a certain moving average. Okay, I want to use this. I want to just use my eye on these things. I don't want to, like, you know, it's not like I'll take that thank you where it has to be right around that 10-period moving average. No, I kind of want to look more at support, resistance, you know, where it is on the daily chart to see if it's something I may want to enter. But let me take a look. Let's take a look. Just take a look at some of the stocks today. Bear with me. Another drink of water here. And we'll look at all of them. We'll look at some of the good, the bad, and the ugly. And very first one this morning, TL came through, and not bad. But you can see it's a long way away from any moving average, but, you know, got hit there and bounced back a little bit. Let's take a look at this SBH. Now that was a beauty. Okay, look where it came down. Okay, there's your random act of violence this morning. Shoved it down right to its support level, and boom, had a nice bounce. Pulled back, gave you another chance, had a nice bounce there. I don't think this one worked. Yeah, not really. May want to keep an eye on if it comes down to this 10-period moving average tomorrow. Let me spread out the daily chart here so you can see they're looking pretty good. You still have some nice, even though it's below its 200, it's still above its 3 moving averages there. SBH, look at that one. RCII, I don't think it worked either. I think this one got destroyed. But honestly, if I look over here and I see a chart like this, look at these nasty moves over the last 3 months. Trust me, I'm just backing away. You know, look at that compared to some decent, you know, normal, you know, waltz type. This is a waltz. You know, this right here is a mosh pit. And there's no rhyme or reason to something that trades like that. I would probably never trade something like that. All right, let's take a look here, see what else came through here. That one looks like it bounced right off its 10 period moving average on the daily. You can see right there, caught it pretty much at the low. Didn't do a whole lot after that. Nice 50 cents, but not looking bad on the daily there. There's another one that kind of right off the 10 period moving average. It's a little bit slow on this line coming in there. There it is. The green, I'm sorry, the blue arrow. There was one beautiful one in here today I wanted to show you guys. That's going to be probably right on this red line right here. There it is. Came down a little bit further after that, another 15, actually another 50 cents. Well, that's the beauty about these things too. There's one that right off the 10 period moving average. So you can see there's some opportunity in just viewing something like this, especially if you're just, maybe you're slow, you want to slow things down by a little bit at a time. Now, obviously you got to use some common sense in there. If the market's crashing, you might not want to jump in front of the, that one really didn't work. But look at it, it's in no man's land, okay? It just kind of is right in the middle of yesterday's range. So this is one I'd probably wait, see if I could catch it, closer to that moving average. Really looking for that one. And that one's not too bad. You can see where it came down to its 200-day, almost touched it there. This sector got hit pretty good. Or today for some reason. This one is another one of those maritime shippers. And we already looked at that one. I think this boot was kind of a nice one. Yeah, really nice one there. Boot. Look at there. Boom. Look at that bounce. Came right down here is what it did yesterday too. Bounced off that wick, did it again today. Okay, hold on. Somebody's asking a question here.
Right, I was just going to point out that Vladimir question, like,
yeah,
what's the difference between, those two?
Very, very good question. Okay, and I'll take that. A stock has to be up over the last 20 days, at least 10%. And not only that, it has to be hitting the 10 period moving average on the daily chart, okay, or at least close to it. In this one, I don't have any sort of change in the last 20 days where it has to be up 10% or more, and I do not have anything bracketing the 10 period, making it have to be around that 10 period moving average. This is just basically very simple, looking for stocks that are up. I mean, they have a nice composite rating, which means technically and fundamentally that they should be pretty sound, okay? But for whatever reason, they're getting hit today, and you can see the relative volume over here. They're getting hit and have to be down 2.5% on really not a whole lot of volume. To me, a lot of times that is just shenanigans going on, trying to shake you out of good stocks, okay? So, but once again, this is not something where you just go in and buy every one. I'd like to take a look, and decide if it's right for me, if it's something, and I would probably use this more. Well, I definitely use it more for swing trading because that's really all I'm doing now. So, okay, I'm looking for that one today that was really just crazy beautiful. JetBlue. Let's take a look at it. Yeah, it's kind of in no man's land, even though it went down to yesterday's low. This is one probably after that big green bar there, I probably would have left alone. Take a look at SG. I've already looked at that work. Not bad. Went a little bit deeper, but then a nice bounce at the close. Oh, this one right here was a beauty. TGNA. Caught it right there at,
oh
yeah, look at that, 1542. Watch when you see the blue arrow come up. Isn't that nice?
That's primo.
Mm-hmm. AT&T caught this one. This one went a little bit deeper, but once again, you can see wanted to take out the 2-month low there into a charm. I mean, basically, it bounced up right at pretty much where it came through, but nonetheless, that one was doing, at the time, was only doing 1.64 volume. You can see the volume kind of came up there, relative volume came up there at the close. Let's check out this AANN. Yeah, when they get later on in the day, I probably a little less interested. These are ones that you probably want to catch before the last 2 hours. If they hadn't bounced by then, they're probably not going to bounce. Yeah, see, I wouldn't pay attention to the last, maybe the last, late in the day like that. Like I said, if they haven't bounced, more than likely they're not going to. But anyway, this is the reason I keep showing you things like this. I really believe in this marketplace. You got to be careful chasing momentum, because there's really no momentum in either direction. Obviously, earnings plays like Lursix and things like that's a different story. When you have earnings plays and they're breaking out to all-time highs on huge volume, that's a different story. There's momentum there that you can trade. I mean, for sure, and swing trade. But this might be a way, where you guys can, look for these stocks that are getting just slammed. Remember, they have to be down 2.5%, but they still have a pretty good composite rating score. Yeah, that's right. Waleed says the daily looks good on majority of them. That's true. That's because, and if the daily didn't look good, they wouldn't have a composite score of 70 or higher. And like I said, remember, by the time they come through this alert and they're down 2.5% on the day, there's a good chance they may have lost 6 to 8 points, during the day, because of our so many, filters that we have in there, not only on the daily but intraday too. So, that's definitely something to keep an eye on. I'm going to share it with you guys, and then I'm going to move over to my next topic here, unless we have any more questions. But let me just do it this way so I don't. All right, and what I'm going to do is drop it into the chat window. I'll just call it random. And there you go. So you guys, what I'm doing, if you're in here for the first time and you don't know the software very well, I'm able to share this alert with all of our subscribers, because they can just take that code that I dropped into the chat window and now they have access to it. You're welcome, Waleed. All right, now for a lesson trading. Toll Brothers. Let me just stretch out this map here a little bit. There we go. Okay, here's Toll Brothers. And if you haven't noticed, the home builders have just been killing it lately. And I mentioned here, I think I talked about it. As a matter of fact, I did it in one of Steve's webinar. I told him to mark this Toll Brothers up at this level right here, because that's where I'm going to buy it. And I did. Let me draw that line. You can see it had a little shakeout down right there, and then popped above that level right here and moved higher, flirted with a multi-month high, pulled back, and now what I did is I bought it. I bought some more today. Actually, before it went to highs, I bought some more about right here this morning. So I'm really loving this setup here, and I think it has a lot of potential, because what happened is, and I usually don't care too much about what analysts do, but when you get a downgrade, this got a downgrade about 10 days ago. I think it was probably right in here somewhere, okay? And then there's your shakeout, and popped right up. Well, the downgrade was a downgrade, but he didn't move he still had his target price at $42. He didn't change his target price, which is kind of a little crazy for me. If you're going to downgrade it, well, you keep the target, you know, your target price the same. But nonetheless, that's not the main reason. Okay, the main reason is here is let's take a look at the peers. Lennar, look out move. What kind of move Lennar is? Pulte, which had earnings I think this morning. Look at that move. KBH. All right. Now, they're just killing it right here as compared to Toll Brothers. Now that doesn't mean, that's no reason for you to go out and buy a stock just because it's lagging. Okay. Usually the home builders will track each other pretty closely, but that's still not a reason. Okay. You know, I think Toll Brother makes higher priced homes, so they're maybe in a little bit different, you know, market as far as the their income class and stuff like that. But regardless, I still love that the fact that the peers, even Beazer, has gotten into the game, and Hovmanian. Okay, so when I see this and I see Toll Brothers still kind of squabbling around, not even through last month's high when all the rest of them have just ripped, but still, that's not a reason to go out and buy something. Okay, but now when I look at this daily setup right here, okay, it is showing all kinds of strength. You got your 10-period moving average moving through your 20. You got it setting up for a nice little cup and handle, not pulling back, you know, like it was over here. I think the downgrade is kind of hopefully out of the way now. But even still, you know, I think if it can get above this multi-month high, and we take a look at the weekly, I think you can see what I'm talking about here, the potential for this one. Beautiful looking weekly here. So if it can get above this level, you can see what it's dealing with right now, all this resistance on the weekly. Okay, so I think if it does take out a 2-month high, and earnings are not until December 3rd, so I don't have anything to worry about as far as earnings go. I really believe this has the potential to minimum, you know, go to this level right here, which is around 40, what's that, almost 44. Okay, and then if it gets above that, you know, who knows. But I'm really liking this setup, and I'm not trying to talk you guys into buying it. Trust me, that's not what we do here. I can't do that. I'm just giving you a reason of why I'm in it and why I added to my position today. Just kind of giving you logic of some of the things, you know, I'd look for. I love playing, you know, sympathy moves. I really believe, you know, this one is lagging for whatever reason. You know, fundamentally, it's not the, you know, it's price to earnings ratio is even lagging, trading at an 8.62 compared to others, which are probably closer to around 13 or 14. But I just, there's a lot of things I like about this. And when I see a setup like this, you know, I want to give you the reasons why, not to try to share you an idea and get you to buy it, because honestly, my average cost is probably a lot better than where it is now. But nonetheless, kind of give you the reason of why, you know, why I like it. Let me get this back on the daily here, and why I added today. And I think that's it's a good thing to learn. Okay, if you feel like you're in a good position and everything's setting up and all the stars are lining up, you know, it's easy to you know, sell. You know, even though I only got a buck out of this. I mean, a lot of people, you know, when it didn't go through here this time, and this time they made, oh, I'm just going to cut it. But I like the way it's setting up, and this is why I kind of, you know, bought more today. Who knows? Maybe it wakes up in the morning and gets slammed for some reason, another downgrade or whatever. But I do like the way this one is setting up. All right, let me see. I see some questions coming through here. Yeah, that's true, David. And thank you for answering Gerald there, Jamie. You're welcome, Waleed. You're welcome. Let's see. Would it be wiser to wait for the breakout level to consider? Some people are that way, Anthony. I'm one, I'd rather anticipate, you know, that's why I bought it right here. You know, breaking above this level right here. It's a market where it's tough to buy breakouts, and that's, you know, that's why I kind of like to anticipate, get a little head start. You know, now I'm in a position where my stop, you know, is now I really wouldn't want to see it break down through these moves. Definitely wouldn't want to see it go back through my first buy. But yeah, I'm one. If it's an explosive bull market, yeah, you can buy breakouts and everything's fine. But when we're just kind of in this funk that we've been in over the last several months, and you know, I'd like to kind of anticipate. Now, that doesn't mean I might not add, even though I got a pretty good position. You know, if it does take out this high. But I hope that answers your question there. I mean, there's nothing wrong. I mean, take a look at LURSIX. There's nothing wrong with buying breakouts when they're driven, you know, driven by earnings and news, huge volume of the day. You know, there was another one today. Let's see. Oh, Holly had a nice call this morning, but unfortunately, she got out early on this one. But this one, I told the guys, I said, I think her best call today was Tal, but on the earnings play, you just can't have tight stops, you know. But that was it was a Chinese education company, so that's kind of scary, but still a nice little breakout there. But yeah, there's nothing wrong with buying breakouts if the setup is right and the volume is there. You know, just be careful, because a lot of times those breakouts in this market, these don't work. All right. Well, let's see if I got anything else right here. Let's see. In the sense, your big plan is expected after the level break. I'm not sure, you know, what my plan is to anticipate. Like I said, I love what the sector was doing. I was aware of this downgrade, which I thought was kind of a weak downgrade, and it really didn't go anywhere after that downgrade. That tells me that strength. A lot of times you get a tier 1 downgrade, these things get hit pretty hard in most cases. This one didn't budge. So that just kind of fortified my belief in it. And then of course, when it, you know, went above that level right there, yeah, that was just a kind of a no-brainer buy for me after a downgrade. Anytime you see what you believe to be bad news, and a tier 1 downgrade is usually bad news, and the stock price doesn't act accordingly, that should give you a heads up sign right there. It's like stocks that have earnings and they've been beaten up. In other words, going into earnings, and then they gap down, even though the, you know, earnings were horrific, and they gap down, and all of a sudden, boom, they take out and they, you know, go to highs and turn green. That's telling you right there, the, you know, the bad news was priced in. Amazon, I just leave alone. You know, this is 2 quarters in a row. You know, you had a gap down right here on earnings, and here we go again. You have another gap down. That doesn't mean it might open up and just, you know, bounce up. But here's what happened last earnings. You had a little fall. Of course, the market kind of dropped off there too. So any hope in Twitter? You know our belief as far as trading stocks after earnings, and this one, you know, been better off shorting it. Now, there's nothing I like about Twitter right now. You know, maybe, who knows, maybe down here at this level, you can give it a shot, but I don't know. That's ugly there. It's below all its moving averages now. Nothing real strong about that. Question on historical data with commissions versus future history, no commissions. Might need to see future data to help make decisions on past data. Question mark. Well, what I love about commissions, and what I brought up the other day, is now you can scale into stocks, and you know, that's what I love, especially like for swing trading. You know, you can you see something, you want to take a chance, or maybe use an example today of that alert I just shared with you. You see something getting beat up, okay? You like the level, but you're not quite sure if the selling is done. Well, this is where you can go in, buy a third of your position, a quarter of your position if you have free trades. So I don't know if that's I think is the biggest part of zero, and just the fact that, man, no more commissions. Gosh, how good is that? You're welcome, James. But yeah, I think even if you're day trading, you can scale in now, a third, a fifth of your size and not have to worry. If you're wrong, you only got a small, percentage of your position. All right, Anthony, what do you think about the idea that market uses earnings, regardless whether up or down, to act on stocks that were beat up and overbought? Amazon overbought today's earnings. Not really bad at all. I don't. Well, you say not really bad at all, but when you have a growth stock, okay, like Amazon, you need to keep that growth up, okay. Anytime a growth stock, starts to kind of lose its oomph as far as its growth percentage, yeah, they typically, tend to, I don't want to say commoditize, because Amazon, I think, is far from being commoditized, but some other companies out there, that when they finally lose their ability to have this accelerated earnings growth, and yeah, that revenue growth, I should say, yeah, they start this earnings per share, this price to earnings, 71%, they start to come down to a level that's more accepted by the street, which I'm not sure what the average is trading at these days, 20%, 15, I have no idea, but I just know when you have stocks that are trading at this astronomical, price to earnings, and their growth starts to give a little bit. And I'm not saying Amazon's doing that, but they will get hit when their earnings, when they don't have their expected growth. Kim, yeah, I saw that hit something. That one came across yesterday. Came across one of my things right here. Yeah, it's holding up. I mean, I would keep an eye. You have a big move from 18, to 23 area. So now it's a momentum stock. You want to hold it to momentum line. If it does break this momentum line and closes below it, there's a good chance it might come down here, and try to find the level, maybe back over here. You could feel some pain back over here, which is a pretty decent drop. But as long as, yeah, it could have some more juice for sure. All right, let me see if a lot of good questions today. You guys are on it. Yeah, BP has earnings coming up. Yeah, BP, British Petroleum, is that right? Yeah, I'm not big on the refineries and the conglomerate oil companies. They just seem like they've been struggling for so long, and yeah, you got your downtrend here. It needs to break that downtrend. I'm not going to draw it, but you can see here, and it's coming up close to this downtrend. So yeah, I'm not expecting too much from that, James. Until earnings, it'll be an earnings play. I have a day job, Brian says. If I were to take 10 stocks from any section of TI and run them through, where should I look? And run them through 845. I'm CT. I'm not sure what he's going to run them through, Brian.
Yeah, I was trying to figure that out myself, Andy.
Yeah. Okay, Jeff says on the scan you share, do you insist? No, that's a matter of preference. Sean and I are kind of the same. I like stocks that at least trade about 500,000 shares a day. Once they start getting around 200,000 or 300,000, they get a little skittish, and the moves can be exaggerated. But no, if it's just a matter of preference, that's totally subjective, Jeff. If you don't mind, you can change that to 300, and you'd get more ideas coming through. That's for sure. Okay, buy 845 and sell at 1. Yeah, I can't. Yeah, Jamie says be pretty random. Yeah, I don't have any studies run on buying at a certain time and selling at a certain time. My stuff's mostly,
Of course, you can back test for that, but
yeah,
it's going to be hard to find something that works consistently. just shooting from the hip here, you know.
Anthony says, will you be using the random acts of violence scan now and relying on previous? Anthony, you know what I'll do is I'll minimized, you know, in my down here, and I will pull it up periodically and take a look. It might not, maybe it does make it to my main screen, or maybe I put it on another monitor, but I will definitely, you know, pull it up in the morning. You know, probably won't pull it up till around 30 minutes after the market opens. I'm not looking for stuff that gets, you know, jammed too hard, you know, in the first 15, 20 minutes. But and remember, I'm also kind of looking at the market. So in other words, if we get a market that gaps down, say the market gaps down tomorrow on Amazon, okay, and then it starts getting hit, you know, and there's a chance that it's just going to be a down day with continued movement down all day, you know, I probably won't even give it a thought. But today's a good example, and this is what it comes down to, guys. You know, there's a lot of good strategies out there, but it's when you implement them, and you got to implement them in the right you know, right market. Like today, if you're playing this, you could have made a killing. Okay, you had a gap up, market came down for a couple of hours, a lot of good ideas came through here, and they bounced nicely, but so did the market. So you know, so yeah, it's all about when to implement, you know, these strategies, not just randomly, you know, I mean, just taking them regardless of what the market's doing, and that's where you're going to get in trouble. But you know, that being said, I mean, you got strong stocks on a composite rating, and they're getting hit today on relatively, you know, not big volume. All right, guys, we are at the top of the hour, and I got to bring Scott in because I know he's got some work to do. He's got to get ready for this big event. He is the man in charge of that thing. So, Scott, you want to come on in and walk us out of here?
Sure, yeah, a couple items on the way out. We don't have any more room at the event to attend, but we do have room to watch on our live stream. Watch it live. Lots of great speakers. Go to the trade-ideas.com/livestream webpage to see all the speakers that are going to be there and the schedule. Then you can tune in live and watch what you want, watch the whole thing, or put in your email address on that page to get notifications on how to watch the recording as soon as the summit's over. It's going to be a great day, so tune in. We're looking forward to it, and hopefully everything goes according to plan. We've got a series of ebooks that are really good. There's 3 books. Each has 2 chapters with cloud links to the strategies they talk about. A couple of chapters were written by Andy and Jamie, so get your copies. Trade-ideas.com/setup is the page to go to. Put in your email address to have the download links delivered to you. Got a podcast. We're not doing it tomorrow. We're taking a week off because of the event that we're doing, but then the next week it'll resume again. So search for Trade Ideas Podcast wherever you listen to them and add us as a subscription. The code that we talked about at the top of the webinar to save you money to activate a subscription. Fall into savings. It's case sensitive. Use that to save 15% off any subscription or Brokerage Plus license. You can also use this to upgrade from standard to premium. If you're a standard member and decide you want the extra features the premium brings you, go for it. You can follow Jamie on Twitter at QuantBot, or Steve Gomez is at Today Trader, also at Trade Ideas. Facebook.com/TradeIdeasPro is the URL to go to on Facebook to follow us and share the stuff we post with your friends. If you have any questions at all, email info@trade-ideas.com. It goes into our help desk software and gets routed to the appropriate team member. Thanks, everyone. Remember to tune in on Saturday. Thanks, Jamie.
Yeah.
Thanks everybody. We'll see you tomorrow, some of you.
See ya. Bye-bye.